You need to pay very close attention to what I'm about to tell you, because what just happened in the markets, most people won't understand it until it's too late, and by then, your portfolio could be down 30, 40, maybe even 50%. I'm not here to sugarcoat this. I'm here to show you what the smart money already knows, what they're doing right now while everyone else is still asleep. Gold just hit an all-time high. Silver just hit an all-time high. And if you think that's just a coincidence or some random market move, you're missing the entire picture. This isn't about metals going up. This is about something far more dangerous. This is about trust evaporating. This is about the very foundation of our financial system being questioned in real time. Let me explain what's actually happening here, and why this should concern you deeply if you're holding stocks, bonds, or frankly, anything tied to the traditional financial system. When gold and silver both surge to record levels at the same time, it's not because people suddenly love shiny objects. It's because capital is running away from something. And what it's running from right now is sovereign debt. Government bonds, the very instruments that are supposed to be the safest, most boring investments on the planet, the things pension funds buy, the things banks use as collateral, the bedrock of the entire financial system. But right now, they're being rejected, sold off, dumped, and that is a 5-alarm fire that almost nobody is talking about. Here's why this matters to you, even if you don't own a single bond. The entire stock market, the entire valuation framework we use to price companies, is built on one assumption. That assumption is that government bonds are risk-free. We call them the risk-free rate. Every stock, every corporate bond, every piece of financial engineering is priced relative to that rate. It's the anchor, the foundation, the thing that never moves, except now it is moving. And when the foundation cracks, everything built on top of it starts to crumble. Let me walk you through the mechanics because this is where it gets really dangerous. Stocks are valued based on future cash flows. The money a company is expected to make years from now, discounted back to today using interest rates. When those rates are stable and when bonds are trusted, the system works. Investors can model the future. They can build portfolios. They can sleep at night. But when the so-called risk-free asset gets rejected, when treasury bonds start losing value and yields spike because nobody wants to hold them, everything changes. Those future cash flows don't just get repriced, they get destroyed. Because if the safest asset in the world is no longer safe, what does that say about everything else? It says the model is broken. And when the model breaks, valuations don't adjust gradually. They collapse, fast, violently, without warning. And here's the part that should terrify you. Banks hold trillions of dollars in government bonds as collateral. It's what they use to prove they're solvent. It's what they use to borrow money in the overnight lending markets. It's the glue that holds the entire banking system together, and right now that collateral is losing value by the second. What happens when a bank's collateral loses value? Margin calls. They have to post more collateral or sell assets. And when one bank starts selling, others follow. It's not a choice. It's a chain reaction, a forced liquidation event. And when that happens, liquidity dries up. Credit markets freeze. And suddenly the exit doors that were wide open yesterday are jammed shut today. Think about what this means on a practical level. When liquidity disappears from the system, it doesn't just affect banks and hedge funds. It affects your retirement account, your brokerage account, your ability to sell stocks at a fair price. Because when everyone is trying to sell at the same time, and there are no buyers, prices don't just fall. They crater. They gap down. You get filled at prices you never imagined possible. Now, some of you might be thinking, okay, but the market has been volatile before. This is just another dip. It'll bounce back. And I understand that reaction. Because for the last decade, every dip has been bought. Every crash has been rescued. The Federal Reserve has printed money, cut rates, and saved the day over and over again. But here's the problem. This time, they're trapped. Completely and utterly trapped. And I'll explain why. If the Fed steps in and prints money to stabilize the bond market, to keep yields from spiking, to prevent this whole thing from spiraling, what happens? Inflation roars back. And gold and silver, which are already at all-time highs, go vertical. They explode higher. Because printing money to solve a debt crisis is like pouring gasoline on a fire. It confirms to the market that the currency itself is being debased, that the dollars in your bank account are worth less every single day. The crypto market understands this dynamic perfectly. When fiat currency loses trust, when central banks prove they'll sacrifice the value of money to save the bond market, capital flows into alternative stores of value. Bitcoin was created specifically for this scenario, digital gold for a digital age. And right now, alongside physical gold and silver, we're seeing that thesis play out in real time. But if the Fed doesn't print, if they sit back and do nothing, the credit markets freeze. Banks can't lend. Businesses can't borrow. The entire economy seizes up. and we get a deflationary crash that makes 2008 look like a warm-up act. So they're damned if they do, and damned if they don't. And the market knows it. That's why gold is exploding. That's why capital is fleeing into hard assets, because the smart money understands that the Fed has lost control. They're out of tools, out of options, out of credibility. This is what I call the ultimate corner. The Fed has spent years painting themselves into this corner, and now there's no way out that doesn't involve massive pain for someone. Either bondholders get destroyed, or currency holders get destroyed, or equity holders get destroyed. Someone is going to pay the price for decades of monetary experimentation and debt accumulation, and right now the market is trying to figure out who that someone will be. Now I want you to understand something. This pattern, this exact setup has happened before, and every single time it ended badly. Let me take you back. In the year 2000, right before the dot-com bubble collapsed, we saw a similar flight to safety. Investors started questioning valuations, started realizing that the emperor had no clothes. Companies with no profits, no business models, no path to profitability were trading at insane multiples. And when the music stopped, when reality set in, the Nasdaq crashed by 78%. Trillions of dollars in wealth evaporated. People who thought they were millionaires on paper went back to zero. Then in 2007, months before the global financial crisis, we saw the same warning signs. Credit spreads widening, interbank lending freezing up. Banks started hoarding cash because they didn't trust each other's balance sheets. They knew there were toxic assets hidden everywhere, they just didn't know where. And by 2008, the entire financial system was on the brink of collapse. Lehman Brothers went under, Bear Stearns collapsed, AIG needed a government bailout. Banks were bailed out with taxpayer money, and the average person lost their job, their home, their savings. Retirement accounts were cut in half. Dreams were shattered. And then, in 2019, we saw it again in the repo market. Overnight lending rates spiked to 10% because banks didn't trust each other. The plumbing of the financial system, the boring stuff nobody pays attention to, suddenly broke. The Fed had to step in with hundreds of billions in emergency lending just to keep the lights on. And 6 months later, we had a pandemic and the fastest market crash in history. The S&P 500 dropped 34% in just over a month. 3 times, 3 warnings, 3 crashes. And every single time, the people who ignored the warning signs got destroyed. The people who said, "This time is different," lost everything. The people who believed the experts on television, the ones who said everything was fine right up until it wasn't, they were the ones left holding worthless assets. So when I see gold and silver both hitting all-time highs at the same time, when I see sovereign debt being rejected, when I see the collateral underpinning the entire banking system losing value, I don't shrug it off. I don't assume this time is different, because it never is. The details change, the specific triggers change, but the pattern is always the same. Excess debt, loss of confidence, flight to safety, and then collapse. Now, here's what most people don't understand about market crashes. They don't happen overnight. There's a lag, a delay. The warning signs show up first, the cracks appear, the smart money moves, and then, weeks or months later, the dam breaks. And by that time, it's too late to get out. Risk assets, stocks, speculative investments, they might ignore this for a moment. They might keep climbing on momentum, on hope, on the belief that someone will step in and save the day. The psychology of markets is fascinating. People become conditioned to expect rescues. They become conditioned to buy every dip because it's worked for so long. But that conditioning is dangerous because it creates complacency. It creates a false sense of security. And when reality finally asserts itself, the shock is devastating. But they won't ignore it forever. Because eventually, reality catches up. And when it does, the selling isn't orderly. It's a stampede. It's panic. It's primal fear taking over. Margin calls hit. Leveraged positions get liquidated. Hedge funds blow up. Retail investors panic. And everyone rushes for the same narrow exit at the same time. That's when you see 20% drops in a week. That's when you see circuit breakers triggered. That's when you see portfolios cut in half. That's when you see grown men crying on the trading floor because they've lost everything. And here's the brutal truth. Most people won't see it coming. They'll read the headlines after the fact. They'll watch the news coverage showing the carnage. They'll wonder how they missed it. They'll blame the Fed or the government or Wall Street. But the signs were there. The warning was loud and clear. They just chose not to listen. They chose to believe that everything would be fine because everything had always been fine before. I've been doing this for over 20 years. I've traded through multiple market cycles. I've seen the euphoria at the top and the despair at the bottom. I've watched fortunes made and fortunes lost. I've seen people become millionaires, and I've seen people lose their homes. And through all of that, I've learned to read the signals, to separate noise from signal, to know when the market is pricing in optimism and when it's pricing in fear. And right now, the market is pricing in a total loss of control. It's pricing in the possibility that the central banks can't fix this, that the tools that worked for the last decade won't work anymore, that we're entering a new regime where the rules have changed and the old playbook has been thrown out. When gold re-rates this aggressively, it acts as a black hole for liquidity. Think about what that means. Every dollar that flows into gold is a dollar that's not buying stocks, not buying bonds, not circulating through the economy. It's being pulled out of the productive system and locked away in a metal that generates no cash flow, pays no dividend, creates no jobs. People only do that when they're terrified, when they believe that holding paper assets is more dangerous than holding something that's been valued for 5,000 years. I've called every major market top and bottom over the last 10 years publicly. I've told people when to get in and when to get out. And I've been right. Not because I'm lucky, not because I have a crystal ball, but because I understand how these systems work. I understand the mechanics, the incentives, the breaking points. I understand that markets are driven by human psychology, and human psychology is predictable when you know what to look for. And right now, based on everything I'm seeing, based on 2 decades of experience, based on pattern recognition that's been proven correct again and again, I believe we are heading into a major market crash within the next 6 to 12 months. I don't say that lightly. I don't say that to scare you or to get clicks or to sell you something. I say it because the data, the signals, the setup, they all point in the same direction. They all tell the same story. The Forex markets are showing stress. Currency volatility is picking up. Central banks are being forced to intervene to defend their currencies. The dollar, the euro, the yen, they're all showing signs of instability. And when currencies become unstable, international capital flows become chaotic. Money starts looking for safe harbors. And right now, those safe harbors are precious metals and select hard assets. The crypto markets are watching this carefully too. Bitcoin and other cryptocurrencies were born out of the last financial crisis. They were created as an alternative to a system that had proven itself corrupt and fragile. And while crypto is volatile, while it has its own risks, the underlying thesis is being validated right now. When trust in traditional finance breaks down, alternatives become attractive. When the bond market is rejected, when fiat currency is debased, people look for options. And those options are being priced higher every single day. When gold acts as a black hole for liquidity, when it re-rates this aggressively, it pulls capital away from everything else. It starves the system. And when the system is already fragile, already over-leveraged, already dependent on continuous liquidity, that starvation is fatal. The exit doors are closing, not metaphorically, literally. The market is becoming less liquid. Bid-ask spreads are widening. Volatility is increasing. Trading volumes in certain assets are dropping because people are afraid to commit capital. And when the panic hits, when the real selling starts, there won't be enough buyers to absorb the wave. Prices will gap, circuit breakers will trip, and people will be trapped in positions they can't exit. Now, I want to be very clear about something. When I make my move, when I fully exit the markets, I will announce it publicly. I will tell everyone. I'm not going to quietly slip out the back door and leave you holding the bag. I'm not going to protect myself and stay silent while others get destroyed. I'm going to sound the alarm as loud as I can so that anyone paying attention has a chance to protect themselves. But you have to be paying attention. You have to be following me. You have to have notifications turned on. Because when that moment comes, it will happen fast. There won't be time for second guessing. There won't be time for debate. There won't be time to research or to get a second opinion. You'll have a narrow window to act, and then it'll be gone. I've spent 2 decades learning how to navigate these markets. I've built wealth through crashes and booms. I've survived and thrived when others were wiped out. I've developed systems, strategies, and frameworks that work in all market conditions, and I've helped thousands of people do the same. People who were broke, who had nothing, who were starting from zero, and who are now financially secure because they learned to see what I see, because they learned to think differently, because they learned that following the crowd is how you lose money, and thinking independently is how you make it. And I want to help you too. I've put together a complete guide, a step-by-step roadmap from $0 to $1 million. The exact strategies I use, the exact mindset shifts you need, the exact moves that separate those who survive market crashes from those who get wiped out. This isn't theory. This isn't academic nonsense. This is practical, battle-tested knowledge that I've used to build real wealth in real markets. If you want that guide, All you have to do is comment the word guide below and check your DMs. I'll send it to you. No catch, no gimmick, no upsell, just real, actionable intelligence that could change your financial life forever. But whether you take that step or not, please do yourself a favor. Don't ignore what's happening right now. Don't assume this is just another market fluctuation. Don't wait for CNBC to tell you it's a crisis, because by then it'll be too late. By then your stocks will be down 40% and you'll be wondering why nobody warned you. But someone did warn you. I'm warning you right now. Gold and silver at all-time highs. Sovereign debt being rejected. The collateral system cracking. Banks losing the foundation of their solvency. The Fed trapped with no good options. Liquidity draining from the system. This is not normal. This is not fine. This is the market screaming at you to wake up. This is the market telling you that something is fundamentally broken. And the question you need to ask yourself is simple. Are you going to listen, or are you going to be another cautionary tale? Another person who lost everything because they didn't see it coming. Another person who trusted the wrong people, who followed the crowd, who believed everything would be fine until it wasn't. The choice is yours. But I'll tell you this. The smart money has already made their move. They're already out. They're already protecting their wealth. They're already preparing for what's next. They're not waiting for confirmation. They're not waiting for permission. They're acting on the information that's right in front of them. And if you want to be on the right side of this, if you want to survive what's coming and come out stronger on the other side, if you want to be one of the few who actually profits from the chaos instead of being destroyed by it, you need to start paying attention right now. Today. This moment. Because the storm is coming. The clouds are gathering. The wind is picking up. And when it hits, when the full force of this crisis makes landfall, there will be no shelter for those who ignored the warnings. There will be no rescue for those who waited too long. There will only be survivors and casualties. And I'm giving you the chance right now to choose which one you'll be. Don't waste it.